Federal Reserve Chair Jerome Powell spoke today on inflation and interest rate hikes during a key economic conference in Jackson Hole, Wyoming.
The much anticipated remarks come ahead of next month's Fed meeting on a possible rate hike. He admitted that taking steps to reduce inflation would cause some economic pain. He also acknowledged that while prices did go down in July, we're not out of the woods yet.
While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down.
And Rick Newman joins us now. He's a senior columnist for Yahoo Finance and author of Rebounders: How Winners Pivot from Setback to Success. Rick, thanks for joining us. First off, what has been the initial reaction from investors to Powell's remarks?
Investors don't like what Powell had to say today. That's why we're seeing the stock market down over 2% since Powell delivered his speech. And that's not because Powell said anything new. There was nothing new in what he said. What Powell really did, the message he gave the markets is, hey, look, we mean it. We are really going to stay on this, continuing to hike interest rates until inflation is way lower than it is right now. And the reason that's important is some investors clearly have begun to think that maybe the Fed is going to ease up sometime soon, that instead of a half point or even a 3/4 point interest rate hike in September, maybe it'll just be a 1/4 point. Maybe rates won't go up as much as we thought during the rest of the year. And Powell basically came out today and said, nope, we are still on it. We are going to stay at this until inflation is way lower than it is. And that is the word hawk. So you're going to see this word hawkish applied to Powell, even though he really didn't give us any new news today.
Rick, Powell also said that even though inflation cooled down in July, he needs to see more evidence the prices will keep going down. What do you expect the Fed to do next month when it considers another interest rate hike?
Well, the next rate hike is, without a doubt, there is going to be a rate hike when they meet in mid-September. And I think the only question at this point is whether they're going to hike interest rates by 0.5 percentage point, otherwise known as 50 basis points, or whether it's going to be 3/4 of a point, which would be 75 basis points. If it's 3/4 of a point of a point of interest rate hike, that means the Fed, that would be the more aggressive move, which means the Fed is still very, very concerned. That's what they have done for the last two meetings, and that's a lot. That's a lot to raise interest rates at one time. And by contrast, if they would do a 50 basis point or a half point hike, that would suggest, well, maybe the Fed thinks they're making some progress on inflation and they can start to ease up a little bit on interest rate hikes. So the big news here is probably not what's going to happen in September, but it will come when the Fed goes to 1/4 point interest rate hikes or 25 basis points. That will be the real sign that the Fed thinks it's finally making some headway against inflation. And I don't think that's going to happen in September, but it could happen by the end of this year.
Well, you make a good point, but what do you make of the Fed's rate hike strategy up to this point?
It's been very aggressive. And the Fed has clearly indicated they are concerned and perhaps even alarmed that inflation has gotten as high as it is. And they don't see any need to stop raising interest rates at this aggressive pace yet. But as the Fed keeps saying, and this is only appropriate, they're data dependent, and it depends on what happens. So we're going to get another inflation report before the Fed meets in mid-September. That could end up showing about the same thing as the last one. Inflation did come down in July, but it's still at 8.5%. Everybody thinks that's too high. What the Fed wants to see is inflation at 2%. So if it's at 8.5 and they want to get it down to 2, that tells you how far away they are from their target. So the Fed has a lot of work left to do.
Rick Newman, thanks so much for joining us.
Thanks, guys.